Hi, let's see some of the trades that are in progress. And let me just take this particular IDBI and Federal Bank. So we had this call when it's almost closing. The trade is going to get closed. That is 1.1. So let's just check this particular trade. Very interesting one. So you can just see that. So this is IDBI and Federal Bank. And we had 16 trades in this particular pair. The total, the profit is around 5 lakhs here. The profit per trade is around 2,000 rupees. And it's 100% winning trades. 100% winning trades in the sense we have not lost even a single trade here. So we don't have any lose here, lost trade here. So the current trade what we have, so you can just see the back testing data. We have it from 2004 till now. So we will just check all the calls that have been generated in this particular pair. So let's go to the current running call, running trade. That is, we had this particular trade on April 10th. That is, IDBI we had to short and Federal Bank we had to buy. And the correlation should be 2.7 and above for the call to get generated. So it got generated, but here you can see that the correlation is 16% only. Actually, we should have a correlation to 70. But here in this case, why we get into this kind of a trade is, you can see that we have never lost a trade in this. That is 100% winning trades. So it's a risky trade, but seeing this 100%, someone would definitely be interested in entering into this particular trade. And you can see that this is nearly 70%, and you have the volatility as 1.7. We were looking at 2.5. 2.5 is something which we look at. And you can just see that what is the investment that will be needed, around 1,30,000 rupees investment to trade in this particular pair. So April 10th we had this particular trade, and then the first day it was in profit, that is 3,800 profit. Then you can see, so the Z score should come to 1. That is the time when we exit the trade. You can see that actually went up after it gave the trade 3.32. Then we had this loss of 12,064. 22,600 odd. Now further progressing, you can see that it went up to even 40,000 also, 30,000 also. But you need to hold the trade. You need to hold the trade till it comes to 1. So at 1.1, that is on 29th of April, your loss has been covered, and then the trade actually went into profits. So you can see that 5,000 here, 15,000 here, and 30th, that is at the close of the day, we were in a profit of 14,700 rupees. So this call will get closed once it is below 1%, that is below 1. So roughly we are in a profit of around 14,000 rupees. So this trade might get closed on Monday, that is tomorrow. So that is the latest trade in IDBI and Federal Bank. So let's see what the other 15 trades that we have on this particular pair. So I'm just going and looking for the next trade what we had. So we had this particular trade again on September 25th, 2014. It is IDBI buy, and we had to short Federal Bank. You can see that here the correlation is again 51%. The safest trade will be 70%. You should always look at 70%. And this particular thing, this 17% should have actually been 30%. We are looking at 30%. It's 17%. The volatility is around 3.18. So now this particular trade, let me just show you the profits. So the first day itself, it is around 14,000 rupees profit. So you have bought Idbi that went up the next day to 63, and this one 123 again went up to 125. Nevertheless, you have this profit 15,200 rupees. So when you have this correlation which is not matching to 70, so whatever profit you make, you should get out of it as soon as possible. So for 14,000, now again 10,000. You can see the Z score here: 2.3, 2.8, 2.4, 2.2, 2.1, and then again it went up. We had this loss here again. So finally, this 15,000 rupees. This 15,000 rupees, why it is showing them a different background is we have calculated it as, in case if you enter into a trade, you should look at 20%. 20% return on your investment and try to exit at this point. So you could have exited at this point with 20% returns. So eventually it went, and then it closed at 29 rupees profit. But it already gave you enough chances. The first day itself, it gave you around 14,000 rupees. So you could have come to the trade there, or you could have waited, had a chance here also, and finally you have the 29,000, and it ended at 29,000. You can see that the Z score has become 0.97, which is less than 1. So the trade has closed. So that is the second trade. Let me show you this trade. Here again, this is a sort of a perfect trade. IDBI short, Federalbk buy. So the first day it was in negative, that is 800 rupees. The second day it is 11,000 rupees. And on the third trading day it is 19,000 rupees. So that is 20% returns is what we're looking at. You could have got, you could have come out of the trade there, or else you could have waited 29,000. The other way is you can exit. Your Z score here is 4. That is unusual. Usually it will be in the range of 2.72 and in India have 3.5. But here in this particular case, we got the call at 4. The Z score is 4. And you see the correlation is, it is more than 70%. That is 93% is your correlation here. So that's one of the reason why you have got this trade this way. We gave you good profits, and you can see around 38,000 rupees here, 30,000, around 40,000 here, and finally at the close, that is the close what we are looking at, the Z score should become 1. So at 1, once it has closed, give you a profit of 52,000 rupees. That's an excellent profit. The reason why you got this trade this way is the correlation, and your Z score is falling. Your Z score falls from 4 to 1. So once that happens, you get this kind of profit. So this is the third trade what we have. We'll check some more trades. So you have this trade. It roughly went for 3, 6, 7, 8, 9, 10 days. 10 days trade. So here again IDBI is a short, and your Federalbk is a buy. You can see the Z score is 2.8. Your correlation is again 93% here. Here you are seeing the RSI. We wanted 70%, 67. Doesn't matter. And again, your volatility should have been around 2.5. We have got it at 3.16. That's also okay. We'll go into the trade. You see the first day it was 17,000 loss. That is because your Z score should actually fall. In this case, it has gone up 2.8 to 3.5. And the next second day, it again fell to, Z score fell to 1.95. Here you had a profit of 11,000 rupees. Now you can just check this trade: 3.2, 3.4, 2.7, 1.5, 1.3, 1.1. So any trade that gets generated from 2.7 will always have to come to 1. That is, your z-score should always come to 1. So we should wait till it comes to 1. So in this case, you see after 10 days, your profit is around 27,000 rupees. Your trade has closed. Now, my investment is around 1.2 lakhs here. So I'm taking it as 10%, 10% of this. But in our case, we'll even get it at 7.5%. That is the span margin. You can carry. That is the amount that will be required for you to trade. 7.5%. So in this case, you can see that it has already made its 20% returns. And your z-score has come to 0.84. That's wonderful trade. 10 days, it has given you 20, more than it's more than 20%, more than 20% returns. So you can have this strategy. That is where once you make 20% return on your particular investment, you exit that trade. So that was another trade. So we'll just check this trade also. This also went on for quite some time. So here again, IDBI is in buy and Federal Bank is a short. You can see 2.74, the call got generated. It can be minus 2.74 or it can be positive also, the z-score. So correlation is the problem here, 50%. So bit risky trade, but in case if you see this particular trade, first, second, third, fourth, fifth day, it has already given you 20% returns. Again, consistently that kept on going. And then I think we will get into losses. And then again, once the trade is closed, that is, once your z-score becomes nearly 1, you have again close the trade in profit. So 13,000 rupees. But in an ideal case, once you make your 20%, you should exit that particular trade. So roughly around five trading days, your 20% returns have come and then you have exited this particular trade. This is in 2013. So this is a very long call when it went on for quite some time. Again, IDBI buy and Federal Bank short. You can see 2.73, that was quite good. Correlation is also very good. We were looking at more than 70%, it's 89% here. So in case if we check the trade, it went into losses. And then finally, at the end of the end of the trade, it gave you a profit of 2,000 rupees. So you have not lost the trade, but it has given you enough chances where you could exit at also. You can see that here. So you should not panic in case if you find this figure 25,000, 16,000, 18,000 as losses. But you should wait till your z-score comes to 1 or less than 1. So you made a profit, but you have not lost that money, what you have invested. It took quite some time for that trade to close. So let's come to this particular trade. This again on December 11th, December 2011, we had this IDB buy, Federal Bank short. You can see 85% correlation, 2.75 is the z-score. You can see as it falls, it start giving you profits. So here it fell to 1.2, 15,000. That is your 20% return has already applied here. So you could have exited that trade here or wait till the end of the trade. That is, your z-score should come to 1. So finally it ended at 22,000 rupees profit. So this is another trade that went on for 5 days only. So you'll get even this type of trades where you can just see October 20th we had this trade, and 31st is just got closed. So roughly around 4, 5, 6 days, 6 trading days, a profit of 30 rupees. So let me just say an investment of 1 lakh rupees here. Your return is around 30,000 rupees. So that is 30% return in a time span of just 6 days. So it neatly fell from 2.9 to 2.2, 2.2, 1.8, 1.4, and 0.83. That's an excellent trade. So this is again another trade. You can just see that in 2010, 2010, it's again IDBI short and Federalbk buy here. 3.22 is your Z score. It fell down consistently. It gave you a profit on the second day, 19,000 rupees. That's more than 20% returns. Finally, it closed at around 38,000 rupees. Now, in 2010, so roughly around 1 lakh rupees is your investment here, and your return nearly 38%. 38% in a span of 5 days. Again, we have this trade in 2009. That's IDBI short. Again, Federalbk buy. 60% is a correlation here. We should look at 70% actually. At 3.2 it started. It consistently fell. At one point here it gave you 40,000 rupees. 43, 68, 69,000 here, and 70,000 rupees. Finally it closed at 74,000 rupees profit. And that is in 2009. So roughly around 1 lakh rupees is your investment. 75% is your return. So you have invested 1 lakh and you're taking 75%. That is within a span of 3, 6 days, 8 to 9 days, your trade has closed. So another trade here. See again, your correlation is excellent, 96%, 2.7. Again, it went up, but finally it closed at 25,000 rupees profit. Your the score has become 0.97. So it from losses it actually took you to profits. So you should wait when till your Z score comes to 1. So that is the idea. So again, this trade we'll see. This is in 2008. IDBI short, Federalbk buy. 3.3 it started. 90% is a correlation. You can just check. It went into losses and then it came to profits again into losses. But finally, it ended at 14,000 rupees in profit. But it gave you enough chances also here. 9,000. The next for the first day itself, it gave you a profit of 10,000 rupees. It again depends on your profit booking capability. So once you decide your targets, you should even take the trades once you get some profits. So that is another trade. We have one small trade here. So only 3-4 days. So IDBI buy, Federalbk short. Whichever we bought went up to 66 rupees. What we short 179, it went down to 174. You can see the correlation here. 94%. Z score is 2.95. It fell within 4 days. Made a profit of 54,000 rupees. That is in 2008. So 90,000 rupees, roughly 90,000 rupees is your investment. But you made a profit of 54,000 rupees in 4 days. This is again a very good trade, but it gave you enough chances where you could have exited with that 20% profit. So this was in 2007. 178 IDBI short, 368 Federalbk buy, 3.7 is your Z score. It fell to 2.3. Your first target is done. That is 20% return. So again, the next day it went up to 29%, 29,000 profit, and then eventually it fell down. You can see the Z score here. But finally, at the end of the trade, it closed in profits. But our condition is very simple: 20%. You make 20%, you exit the trade. Very neat. I mean, that happened in the second day itself. So in 2 days, 20% returns. That's excellent returns. So let's go to the next trade. So this is again one more trade, very short trade, 7 days. You can see 150 IDBI short, 355 Federalbk buy, 3.3. As soon as it came to 1, you can see the profit. So from the day 1, it has consistently given you profit. You can see 18,000. Finally, it ended at 40,000 rupees profit. So 7 days, around 50% profit return on your investment. There's again one more short trade here. You can see that in 2007 again, it buy sell Federalbk 2.96, 95% excellent correlation. It gave you losses. It went to 3.85, 3.35, and then suddenly it fell down to 0.59, where your profit is. This is a mistake. The background, that's all losses here. But finally, it closed at 0.59. That gave you a profit of 35,000 in a span of 7 days. So this is again another trade. It is in 2006. You can just see that here the correlation is 20, risky trade. So we are seeing that losses because of that. So when your correlation, we are not confident about the correlation, don't enter into the trade. And, in case if you are taking a risk, then try to minimize your risk and wait till it turns into profit. So it turned into profit here on April, and then consistently it has been giving you profits. Finally, it closed at 0.78 here. The reason why you are seeing is 44,000 rupees profit. So these are the trades that what we have in Federalbk and IDBI. So we have seen all 100% returns. Sorry, 100% winning trades here. So the current trade also will close in profits maybe tomorrow. Once this comes down to 1, below 1, then you close the trade. So this is the beauty of the pair strategy. So we'll see some more examples in another session.